So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, Kirk here again from Option Alpha, and welcome back to The Daily Call. Today we are going to answer the question, can we roll inverted strangles from one month to the next? The simple answer to this question is yes, of course you can roll your inverted strangles from 1 month to the next, or one expiration period to the next. The question now is going to become, can you roll them for a credit, meaning you don't want to pay to roll the position? So here's how we're generally set up, and just kind of walking through how I would think about it as we roll positions. And we've done this before in the past, so it's not something that we haven't done. We've done it a bunch of times, and it generally works out pretty well when you extend your trade and give yourself more time. So let's say we have a position, for whatever reason we got inverted on the position, meaning our calls are below our put strikes, we go inverted. And let's say we're inverted by $2. So a very small inversion. Sometimes we can get inverted by more than that, but let's say we go inverted by $2. Our short puts are say 102. Our short calls are at say 100, just to make the math and kind of the thought process easy. If that happened, then the minimum value of that inverted spread would be $2. At expiration, remember that inverted strangles and spreads like that can never trade below the width of the inverted strikes. So if we're $2 inverted, then it's never going to be worth less than $2. Now at expiration, let's say that we still want to make back some money on that trade. And we think for some reason that the stock may stay in that range or may stay very tight in that range, whatever the case is. And so we want to roll that position to the next month. Now the key is going to be, can we roll that position to the next month for a net credit? That means that we're going to have to buy it back for something more than $2 right now, just to close the front month contracts. And we're going to want to resell the next month contracts for something more than we paid to close the front month, if that makes sense, right? So we're going to close the front month contracts. We know we're going to pay more than $2. We want to pay as close to $2 as possible, but we know we're going to pay more than that unless we hold it right up until expiration. And then we want to sell the back month options for more. And in most cases, you can do this. Now, I'm not saying all cases, obviously. You got to check the pricing and make sure you can do it. But in most cases, you actually can roll these inverted strangles from 1 month to the next for additional credits. Now, why would we want to do this? Well, if you go back to some of the other podcasts that we've done, especially even Facebook Lives and on our weekly podcast, we did a huge show, I think, show like 111 or 112, somewhere in there on, which is actually kind of ironic because we're doing, I think this is the daily call is 112 today. But somewhere around there too on the weekly show, we did a huge talk about going inverted and pricing, etc. When you go inverted, it doesn't mean that you're guaranteeing a loss. Most people think that. But in this case, with the example that we have today, if we go inverted by $2, we might have still collected a net credit of $3. So even though we're inverted by $2 and we have to pay $2 regardless, our net credit is still $1. Well, if we can roll for a credit of, say, another $1 to the next contract month, then we've taken in a total credit now after rolls of $4. And now we've actually increased the amount of money that we could potentially make and widened our break-even points, gave ourselves more time, right? Whatever the case is, for the next month. So this idea of just continuing to collect credits is really, really important when you're managing positions and considering to roll them from 1 month to the next, especially with inverted strangles, inverted straddles, iron butterflies, etc. Because we want to increase our overall credit, which helps pad or widen our break-even points for the next month. If you can't roll for a credit, it's not worth doing. I've said this a number of times. It is not worth paying to roll to the next month. It's just worth it to close the position, start over fresh. Chalk it up, scratch it up as a loss, and move on to the next position. Reset the probabilities and try to do it again, right? Don't quit. Just try to do it again, reset the trade. So hopefully that helps out. So again, if you have any questions on rolling positions, let us know. Shoot us an email, send us a tweet, post on Facebook, however you want to get in touch with us. Obviously, let us know. We'll make sure we get your questions answered. As always, hopefully you guys enjoy these. And until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on the Daily Call from OptionAlpha.com.